ASML Holding NV, a Dutch multinational, is a critical cog in the global semiconductor industry. The company specializes in lithography machines essential for advanced microchips. Without ASML, companies like Intel, Samsung, and TSMC couldn't produce the chips powering our devices. ASML's EUV machines are the cutting edge of chip-making technology. ASML's success is intertwined with the growth of the global semiconductor industry.
ASML's recently announced third-quarter earnings report sent shockwaves through the market. The company's earnings fell short of analysts' expectations, triggering a significant sell-off of its stock. This earnings miss has raised concerns about the company's future prospects and the overall health of the semiconductor industry. The company reported revenue of €6.7 billion for the third quarter, falling below the €6.9 billion consensus estimate. Net income also disappointed, coming in at €1.7 billion, lower than analysts' forecasts. This earnings miss marked a rare stumble for ASML, which has consistently exceeded expectations in recent years. The disappointing results have weighed heavily on ASML's stock price. Shares tumbled over 6% following the earnings release. This decline reflects growing investor anxiety about the company's ability to maintain its growth trajectory in the face of mounting challenges. One of the primary factors contributing to ASML's earnings miss is the ongoing trade war between the United States and China. The US government has imposed restrictions on the export of advanced chip-making equipment to China, including ASML's EUV machines. These restrictions have limited ASML's ability to sell its most advanced technology to Chinese customers, impacting its revenue projections. China is a major market for semiconductor equipment, and ASML has been investing heavily in expanding its presence there. However, the US export restrictions have created significant uncertainty for the company's China strategy. ASML is now facing the prospect of losing access to a key growth market. The trade war has also contributed to broader economic uncertainty, making customers more cautious about their spending. Chip makers are hesitant to commit to large capital expenditures, such as purchasing expensive EUV machines, given the uncertain global economic outlook. This cautiousness among ASML's customer base has further impacted its revenue generation. Section 4. Analysts sound the alarm. The earnings miss and the challenging market conditions have prompted analysts to reassess their outlook for ASML. François-Xavier Bouvignies, an analyst at UBS, downgraded ASML's stock from buy to neutral following the earnings report. Bouvignies cited concerns about the impact of US export restrictions on China and the growing cautiousness among chipmakers. Other analysts have echoed these concerns, highlighting the growing risks facing ASML. The trade war, coupled with the cyclical nature of the semiconductor industry, has cast a shadow over the company's future prospects. Analysts are now questioning whether ASML can maintain its historical growth rates in the face of these headwinds. A cloud of uncertainty hangs over the chip industry. ASML's woes have sent ripples throughout the entire chip industry. Major players like Nvidia, TSMC, and Intel have all experienced stock declines. The semiconductor industry is known for its cyclical nature. The current uncertainty surrounding ASML has amplified concerns. Chip makers are grappling with high inventory levels and slowing demand. Geopolitical tensions add to the unease within the industry. The outlook for ASML remains uncertain.